Thanks everyone for joining. We're going to be covering managing percent complete today. So please, happy to have you here. My name is Ron Bro, by the way. I am the CEO of TopStep and happy to be here today. We're going to talk about percent complete. Well, why is it important? How does it work? What are some of the options you have in OpenAir? And then, how do we use it, right? Generally, percent complete equals, a few different use cases. It also is generally used for revenue recognition. So what are some of the revenue recognition rules that you can base percent complete on? And then what about forecasting future percent complete? So we'll talk a little bit about how that works and how to maintain that and set your system up. And then lastly, we'll cover a few custom options around being able to report and view percent complete. Okay, so why do I care about percent complete on my projects? There's a couple of use cases here. One is, if you're doing project management and you are managing your tasks, your planned hours, you have the option to see all that data right there in your project plan and also rolling up to an overall project percent complete. So this aids project managers responsible for those project success to be able to see, we're 52% through our project, and does that seem right, or do we need to take action based on our estimated or planned hours? So, second use case is for revenue recognition for fixed fee projects. So, a lot of accounting rules today require for fixed fee projects to be, if you have cost incurred, hours incurred, labor, in a given period, then you should be taking the requisite revenue to cover those costs. And so for fixed fee, you may have billing milestones that cross months, but at the end of the month, how much work did we do? How much revenue can we incur? And so that's where the percent complete can fit in to be able to help you take the correct amount of revenue based on the effort for that period. So let's go to the basics. How does it work at a very basic level? So within a task, you can have planned hours. The planned hours can be at the task level. It could also be at the assignment level. As hours are entered, the system will calculate percent complete for each task. And out of the box, it's configured generally to just do approved hours divided by planned hours. And that's an auto calculation by OpenAir out of the box. There's another feature called estimated hours / hours remaining feature, and it's an alternative option to managing percent complete. And the benefit of it is that you may have planned hours of 10 in this example, but maybe your estimated hours are at the end of are going to be 12. And so you have to update your estimated hours to adjust your denominator to be able to calculate a percent complete. So in this case, the estimated hours and approved hours calculates a new percentage based on that. So that will allow you to manage your project plan, adjust your tasks, and be able to recalculate your automatic percent complete. So if you're using the hours remaining, there's a couple of ways to manage those. We're not going to go into a lot of detail. I could do a whole webinar on project management. I'm pretty sure I have in the past, but at a high level, once hours are entered and approved, you'll be able on a task to adjust how many hours are remaining. It will calculate how many hours are remaining, and you can override those hours. So in this example, if Matt Price has 3 hours remaining based on his hours he's entered and his planned hours, we can say, okay, well, he actually needs 6 hours to finish his project, or he's done and he needs 0 hours to finish. And based on the input of the task, that will feed the estimate of the task and will update the percent complete calc. So this is how, if you were uber efficient or under efficient on a task, you can manage those estimated hours, remaining hours, to be able to accurately calculate your percent complete. There's also an option to enable those hours remaining to be actually entered by the user on their timesheet. So as they put time against the task, save their timesheet, it will show what that does to their hours remaining, and they have the option to adjust those hours remaining right then on their timesheet, and then that will feed the project task for that particular user. So another option that's available. These are all available for you to turn on yourself under the timesheet other settings inside of the administration module. If you do use estimated hours for percent complete calculation, if you click on the tips icon, either in the old UI or the new UI, there actually is a link that will show you how the percent complete is calculated within a particular task. So if you click on that, you see this link that tells you that you do have the hours remaining estimated hours feature set up, and it will tell you what the calculation is. So what this is showing is that Jody has been 78.5. We've got 250 hours remaining. So the denominator is what's been approved plus what's remaining. That gives you your 328 overall, calculating a 24% complete. So kind of shows you the math there, which is really nice. So what else about percent complete is important? So we'll talk a little bit about how to manage tasks, what happens if we're closing tasks, how does this affect phases, milestones, and then how does it all roll up at a project level? So what if we have some organizations we work with where percent complete is not a scientific hours over hours calc. It's more of the project manager saying, we've completed this much work, and therefore we are this percent complete, irrespective of how many hours we're expecting and how many hours we've worked. So you can set up OpenAir so that the percent complete is a manual set by the project manager or anyone who has access to it. And so that becomes the slider bar, then becomes accessible to move. And based on the percent complete at a task level set by there, it will roll up to an overall project percent complete using OpenAir's calculations. So that is available as an option if you aren't calculating it based on pure hours over hours calculation. There's also an option to close tasks and have those automatically mark 100% complete. We generally recommend this feature. It's really useful because if your planned hours are 40 and you've worked 35 and you're done, you close the task, it will mark that task is 100% complete, and it'll use 100% for that task as part of the factor of what the overall percent complete is for the project. So in that scenario, you don't have to enter the full amount of planned hours to still get the 40-hour effect of the task. And this is also really useful for milestones, is to mark those as billable or recognizable based on closing those and ratcheting from 0 to 100%. And this is also another setup option inside the project other settings administration. The way that OpenAir rolls up percent complete is it is not an overall project. It is a task by task roll up. So it will take each task that qualifies for percent complete calc, and it will roll up those to come up with an overall project percent complete. So it's important to know that it will not factor in any tasks, milestones where there are no planned hours. So if you have non-billable tasks or if you have milestones on your project, those will not factor into the overall project percent complete. It will only pull the tasks where there's hours expected to be worked via planned, and it will use those to calculate. So what's the secret of the calculation of the roll up? So, in this example, we're using planned hours, and we've got 44 planned hours, and each task has hours approved, and it's calculating a percent complete. You'll notice task 1, we are over our planned hours, but OpenAir will never calculate more than 100%. So we're 100% there, we're 25%, we're 50% through task 3. Overall, that is, factoring into a 72%. So even though at the project level, it's showing 44 hours approved, 44 planned, OpenAir will not say this project is 100% complete, because it would only do that if all of the tasks were 100% complete. So it's using a weighted factoring at a task level to determine what the overall project should be. And so it's important. That's why it's important to kind of keep an eye on those tasks and manage those planned hours or estimated hours, so you do get that accurate percent complete. As I mentioned earlier, milestones do not factor into your percent complete. So you'll see in this example, our project is 20% complete. We've got milestones here that can trigger either billing or even revenue recognition. And as we're closing those, where our 20% is not affected. So just more kind of proof or showing how you can manage your milestones using that auto 100% close feature and not impact your percent complete. So now we know how to calculate percent complete and how OpenAir calculates it. Now the question is all right, what do we do with it? So there's a couple of things that you can do with percent complete. The first is being able to use it for revenue recognition. So OpenAir has 3 rules that tie to the native percent complete calculation. So obviously percent complete rule, you can trigger fixed amounts on percent complete rule or incurred versus forecast. So we'll dig into these just a little bit as we go into the next few slides. So the most common one we run into is the out-of-the-box percent complete rule. And this one gives you a good bit of flexibility as how do you want to, what percent do you want to calculate and base on? So for example, if in our example, our project was 20% complete. So we can set this rule to say, at $50,000, use the percent complete each period. We run the rule to determine what the amount of revenue is based on the overall project percent complete. You can also set it for a particular phase. So if you have like a fixed fee phase of your project that you want to do percent complete, but maybe the rest of your project is T&M and you want to keep it in the same project, you could have that fixed fee phase as only filtered here in this billing revenue recognition rule, sorry. And so that's another flexibility way. You can also say, instead, I'm going to force it to use the planned hours or the planned hours for a particular phase or task. And you can also ignore the planned hours and say, we're going to manage just at the budget of the overall project level. So in this case, it's going to look at the budget hours and it's going to look at the approved hours, and it's going to do very simple math for the project to calculate percent complete. And we've had customers go the budget route because they don't do the hours. They don't manage their planned hours at a task level. So in this case, it would use all the approved hours for the project, and it would take the budget hours, and that would be your calculation. Another percent complete option is incurred versus forecast rule. This one can be really powerful, but there's a lot to it that you need to be aware of as you are thinking about using this rule. First and foremost, it was really designed to use cost percent complete. So what is the labor cost I have incurred on this project divided by what is my planned cost for this project? So the labor cost the cost can come from timesheets, it can come from expense reports, and it should actually come from purchase items. The denominator can come from estimated or assigned hours. It can come from booked hours, expenses, and it'll give you a fixed amount. So let's say you have a $5,000 expense budget, and you can enter $5,000 inside of the rule, and it will use that as cost factor in calculation. It can also do if you have pre-budgeted purchases for a project. So as you have purchases coming through, POs, fulfillment, you can use that as part of the calculation as well. So this rule will ultimately create a percent based on the factors you determine what you're using, and it will and then act similarly to the regular percent complete rule. So why would I use an incurred versus forecast rule versus a standard rule? Well, generally we see three use cases. There is an option inside the incurred versus forecast rule to split revenue by user. And so in the standard rule, you will get a single amount for the month or for the period based on the overall percent complete, depending on how you set the rule up. But that's not broken down. If you have 10 people working on this project, it will only, the revenue will actually get allocated to whoever the project owner or project manager is associated to the properties of the project. Versus this rule has the option to actually break the revenue by user. So depending on the contribution of hours by a user, at the end of the period, it will consider how many hours that user entered, and it will allocate an amount of revenue to that user. And it's not period specific, so it's important to understand. It's for the life of the project. So if I'm a user at the beginning of the project and in month one, I am heavy usage, but then in future months, I don't do any more work, I could actually have revenue reversed on me and reshuffled to other users who are heavier working on the project. So it's going to smooth out over the life of the project how much each user contributes, how much they get by adding and subtracting revenue each month based on. So it's a pretty complicated math in the background, but it does it beautifully if this is, an ultimate goal of you trying to attribute revenue contribution at a user level. The other thing we see for this rule is the ability to use bookings. If your organization is focused on resource management and bookings as the basis for your project plan, if you're using bookings to task and you're using that to manage your project plan versus the phase tasks work breakdown structure, then the only way to get percent complete calculation is to use this rule. And you can base it on the bookings. And then the other use cases, if you do want to use expenses or third-party costs as part of the percent calculation. So that's another factor to consider. Now, one thing we've done, a lot of customers want to use this rule for either, generally for splitting the revenue by user or using bookings, but they don't want to factor the cost in as the rule. They just want it to be hours over hours calculation because it's easier to audit, what the amount should be based on the hours versus having to factor in each user's cost in addition to the hours. So the way that you can work around the costing requirement of this rule is by using one of the cost levels within a user record. So as everyone knows, you can have 3 costs enabled in your account, and you can do a $1 cost for users. And then you can in the rule, you can determine what cost level to use, and you can default all this in the rule, and as well as in templates. So by using $1, you can then calculate hours over hours calculation for labor. So a lot of customers do this because of, again, the benefit of being able to easily audit and back into the revenue numbers using the hours calculations. So it's a good way. I will say be careful if you are multi-currency, because you could have some foreign exchange impact if you've got a cost of US, but your rule is based on pounds. There's some math that happens there. So there's some workarounds there, but be careful in multi-currency. But otherwise, it works really well to achieve that. So revenue, obviously generating actual revenue is critical, but also forecasting revenue is critical as well. And if you're, again, using percent complete to calculate your revenue, you also need to be able to use percent complete to forecast how much revenue in the future am I going to take on. So there's some setup that needs to happen for forecasting in OpenAir. As everyone knows, you need to be able to set up your charge projections on what's the basis of the future view of resourcing that you want to use. And then there's a couple of switches. They normally come turned on, but there is a factor in used amount switch. And I'll explain what that means when we get into the next slide. There's also an internal switch that we've seen customers turn on that can be problematic. And it's basically says do not use used or booked or assigned hours before today when running charge projections. And that might sound good, but the only way this switch is really beneficial is if people are entering their time religiously daily. And if people are not entering their time daily and are instead waiting till the end of the week to enter their time, then you're going to cause gaps in your forecasting process with this internal switch. And I don't know of very many organizations that have achieved daily time entry as a Bible event. So we generally steer away from this one. So be careful with this one. So, this is the setting options. And again, depending on how you want to determine future resourcing, whether that be through your project plan and assigned hours, or through the bookings, through the resource module, you can choose the most appropriate. Usually what we see is either approved or worked and booked and worked and assigned, depending on which methodology you require. I did want to call out, I don't think I even knew the difference here, and I did some research today to kind of pull this out, but there's a couple of options that look duplicative on the settings when you're setting your charge projections. And the difference between approved and booked at the bottom and approved and booked at the top is the standard approved and booked is only looking at hours, approved hours for a particular project. So if I was scheduled to work 40 hours next week, and I instead put my 40 hours against a different project next week, those booked hours would still project because I didn't put hours against the project I was booked to. The bottom one will actually look across projects. And if you put 40 on another project for that week, it will cancel out any bookings before that across projects. So that's really handy. It can be very handy because you can have, people get moved around and, you have unfulfilled bookings, but you don't want those to create ghost revenue. So, if you're not using those and it seems appropriate to you, you may want to think about updating your charge projections. And I want to say this is a newish feature in one of the recent releases, but I'm not 100% of when this became available. So I talked about factoring used amounts and percent complete. You'll know pretty quickly if this is not the case because you'll see here in this example, we've got $1,000 budget, $1,000 percent complete rule. We've recognized 800. We're projecting into the future, and it's projecting next month we're going to do 1,000. Well, that may or may not be a desired output with the switch not enabled. When you enable the switch, you get a recognized of 800 and a projected of 200. So, depending on how you're using your projections and how you're setting up your reports, generally most organizations will prefer the switch enabled because it allows you to say, okay, let's create a custom calc that says recognized plus projected, and that some of those two will get you to your budget. And as you execute the project through the life cycle, you can continue each month, you get that same calc. So that's generally what we see, but there is the option to turn these switches on or off depending on the what you're trying to achieve in the reporting. So let's talk about what does percent complete factor in the forecasting. So I took a most basic example here of a single resource on a single project with 100 hours, either estimated hours in the project plan or booked hours in the resource module. We had a $20,000 budget. In month one, the resource enters 20 hours of approved hours. That calculates 20% calculation. and calculates $4,000 for that month. So that your actual revenue from month one is $4,000. If we run a forecast now, and let's say I'm booked or assigned 40 hours next month, what the system is going to do is it's going to assume those 40 hours are going to be worked in future periods. And it's going to say, okay, based on the projection of those hours, what is my projected percent complete going to be in those periods? And then based on the projected POC, it will project how much the revenue will be taken. So by scheduling resources into the future, the system will be able to calculate what the future percent complete may look like based on that. And then by there, back into a dollar amount of your percent complete. So that's how the percent complete factors in. So, your numerator is going to be your, obviously your booked or assigned hours, depending on how you're setting it up. And then your denominator could be, depending on how you set your rules up, right? It could be your budgeted hours, it could be planned hours, it could be your booked hours, it could be your approved hours plus remaining hours. So just, it depends on it's going to use whatever, however the rules set up to factor in the denominator of the projections. Okay, so if none of that works and you still can't get what you want, we've seen a few workarounds to the standard percent complete. You can always do a custom calc if you want. Now, again, you're limited to usability here and only reports. But that might be good for now. If you want to calculate a special calculation using a calc, you can also filter those calcs. So maybe you have some filterable like task type or factor in or out non-billable tasks, and you'll be able to run a report on a custom percent complete. Now, the downside of this is you can't use these as a manner of forecasting or revenue recognition, but you can use these in reports. We've also had scenarios where a customer needed a custom percent complete that's actually stored on the project properties. And generally the use case there is because they have a financial system that they need to send that percent complete to, and they can't use the native percent complete. And we generally see this when a customer does mix and match T&M and fixed fee in the same project. So what we've done in that scenario is we've done some scripting where we will actually script a percent complete calc based on tasks that are marked as fixed fee, generally it's using task types. And so we're looking at the hours entered against those fixed fee tasks, the planned or estimated hours or the bookings against those fixed fee tasks. And we're calculating a percent complete, and then we're storing it in a custom field on the project properties. And then from there, if you have an integrated environment with your finance system, you can sync that percent complete to your finance system, and the finance system can then use that to calculate the percent complete in their revenue recognition methodology. So that's something to think about if you are using another system and you need a custom percent complete in order to get accuracy in your revenue recognition. So in summary, there's a lot of setup / controls in place that you can turn on or off depending on what you're trying to achieve and how you want to achieve it. So hopefully you all learn one tidbit of information in this, and obviously TopStep's here to help if you have further questions. And again, make sure you have a reliable source of calc and you're able to back into your numbers and make sure that they are correct. We don't want to pass around bad data to finance or internally. So it's important to make sure that you are validating your output for both actuals and forecasted. And then, if you are doing milestones, percent complete, leveraging that quick 100% updates is a good way to trigger billing, trigger revenue recognition, if that's your methodology, rather than having to have someone manually set the percent complete or some other method. So it's a good option. Thanks everyone for joining today. Appreciate your continued support of TopStep. If we can be of any assistance, feel free to reach out to us. We have lots of content on our website. We tweet. We are on Facebook. We have LinkedIn accounts, so it's not very hard to follow what we're up to, and we love to educate the public. So thank you very much again.